Hey, Flick, how are you doing? See, I'm glad you're here.
How are you, sir? ¿Cómo está?
Muy bien, muy bien.
¿Cómo está? ¿Todo bien? Sí.
Hola, ¿qué tal? Chief of staff.
How's everything? Igual. ¿Ah? A ver si...
No, yo me regreso esta tarde, pero regresaré, sí.
Yo to sit down chat. Por teléfono es lo mismo, o sea, por teléfono es
Bueno, si quieres tomar
vale. Let's do it.
aquí nos buscamos ya lo mismo. Ok, perfecto.
Pegamos las elecciones. Eso como el que se mete con la mano.
Do we know what network we're on?
I think they're cheap. I think they're cheap.
They said there was one.
I'm ready, like, I moisturizer. I brought my styling.
José, how are you, sir? Digo.
Ahí ha habido y ahora.
Wicked Nasty. Is that what we're looking for today?
Trying to, sí, si puedo sería.
You want some power? I'll get you some power.
Muy amable, muchas gracias.
Should we take away that teacher?
Environment.
Absolute power.
Huh? How are you?
Well, yeah, we're very good.
Have you been back?
You should, man. You should have a get a gig there.
I have my reunion, my 20-year reunion.
Yeah.
See, but I'm not.
No? I got a thing the other day about our alumni. We're having a meeting.
¿Dos?
Isn't that?
I want to listen to you. If I have to listen
It's been a pretty good year. They made a lot
Which
of
channel?
the medical
It's the same
department.
channel, doesn't matter.
Sí, pero
I get it, I got it. Okay.
Medical department. Brain scan. Actually showing you different points. Really exciting stuff. And they were working together. She was working with one of my forwards.
Oh, yeah.
They were working together. He did all the actual physical electric work, and she did all the method. Really exciting.
They added 10%.
8:30.
It's the first one they did for physician wellness.
Muy buenos días. Good morning. Welcome to our meeting. My name is Jose Carrion. I'm chair of the board. I'd like to welcome everyone to the ninth meeting of the Financial Oversight and Management Board for Puerto Rico. Muy buenos días, bienvenidos a todos a nuestra novena reunión de la Junta de Supervisión Fiscal para Puerto Rico. I'd like to ask attendants to please cooperate, as we all have in the past, in conducting a productive meeting, including keeping cell phones in silent mode and abstaining from conversation and comments. Let's proceed, and I'd like to conduct a roll call to determine who is present and quorum. Andrew Biggs.
Present.
Carlos Garcia.
Present.
Judge Arthur Gonzalez. By phone, Judge Arthur Gonzalez. All right, well.
Present.
Thank you, Judge. Jose Ramon Gonzalez will be absent from today's meeting. Ana Matos Santos.
Present.
And Professor David Skeel. David?
I'm present.
Thank you, David. And
I'm present.
yeah, thank you, David. The ex officio member of the governor and his representative, Christian Sobrino, is with us here today.
Present.
Welcome. A quorum is present, and now we'd like to call the meeting to order. I would like to ask General Counsel, Mr. El Curi, to act as secretary for this meeting. And again, I would like to extend a heartfelt welcome to Mr. Christian Sobrino, this being his first public meeting since his appointment as the governor's representative to our board. And I would like to take this opportunity to thank Elias Sanchez for his work and contribution for his service to the board during his tenure. This morning, I would like to recognize the presence of Mr. Jerry Portela, the Executive Director of the Fiscal Agency and Financial Advisor Authority. Welcome, Jerry, and his associated colleagues. I'd like to thank all of you in attendance, all of those here today for this meeting, the ninth meeting of the board being held in Puerto Rico, and to let everybody know, once again, that anyone who's watching the live stream of the website via the board's website at www.oversightboard.pr.gov, I am pleased to say that the audio of this meeting via the website is available in English and in simultaneous Spanish translation. If you log into the English website, the audio will be in English, and if you log into the Spanish website, you will hear the simultaneous translation. So welcome to all of you, all of those who are maybe listening in or watching via the website. Today, we will be dealing with the following topics that are part of our agenda. Number one, approval of the June 30th, 2017 meeting minutes, a report by the chair, administrative matters, and the fourth point will be presentation of the proposed fiscal plan for the Public Corporation for the Supervision and Insurance of Cooperatives, known as COSEC by its acronym in Spanish, assessment and recommendations of the proposed fiscal plan for COSEC, public comment on the proposed fiscal plan for COSEC, discussion and consideration for certification of the proposed fiscal plan for COSEC. Number 5 is discussion of an independent debt investigation and the establishment of a special committee. Number 6 is discussion of pension reforms. And number 7 is discussion and public comment and proposed actions regarding right-sizing measures in the Commonwealth Fiscal Plan. The board will not be considering today the fiscal plan of the University of Puerto Rico, although we are pleased to announce that the board has received from the university its proposed fiscal plan, which the board will promptly review and eventually certify should it comply with the certification requirements. Now let us begin today's work. Our first order of business is to approve the minutes of the board's last meeting held on June 30th, 2017. The proposed minutes are included in your meeting materials. Does anybody have any questions about these minutes? There being no question, I would like to ask for a motion to approve said minutes.
Mr. Chair, I'd like to move approval of the minutes.
Would anybody like to second that motion?
Mr. Chairman, I will second that motion.
I'd like to ask for a voice vote, please. Those in favor, please say yes.
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 Yes, yes.
Having no opposition and all members having voted in favor of the motion, the minutes are approved. Let me continue now by providing the board with my brief report. The board, as you know, has been established under PROMESA, the Puerto Rico Oversight Management and Economic Stability Act, and the board's purpose is to provide a method for Puerto Rico to achieve fiscal responsibility, including pro-growth fiscal reforms, access to capital markets, and infrastructure revitalization. The board also feels compelled to embrace the urgent task of working with the people and the government of Puerto Rico to create the necessary foundation for economic growth and to restore opportunity to our people. At our previous public meeting, I have recounted the board steps as required or allowed by PROMESA to accomplish its statutory mandates. Today, I will restrict my remarks to progress made after the 8th public meeting on June 30th of this year. Earlier this week, we issued our first annual report to the President, Congress, and the Governor of Puerto Rico, and the Legislature, as required by PROMESA. In that report, we reviewed the numerous activities and milestones of our first year in operation and singled out efforts of the board at developing a process for selecting, implementing, and evaluating critical infrastructure projects under Title V of PROMESA. In addition, in recognition of the vital role that economic development plays in the board's efforts, the board made several recommendations in areas in which the federal government can assist the government of Puerto Rico and the board to achieve the objectives of PROMESA, as well as to unleash greater, more dynamic economic activity in the territory. One of those recommendations was to grant Puerto Rico the flexibility and discretion to shape federal social welfare programs to incentivize work and increase labor participation on the island, while simultaneously protecting social welfare for the neediest citizens. I would like to make very clear that the board did not and will not advocate for the elimination of the Nutritional Assistance Program, the Temporary Assistance for Needy Families Program, or the Section 8 program. Furthermore, the board is taking on the self-imposed responsibility of bringing together the private sector, the third sector, the government of Puerto Rico, and the federal government to develop and institutionalize a common economic vision to build and implement a comprehensive short-term and long-term economic development program for our people, under which prosperity and opportunity will be available to our future generations. Since our last public meeting, the board also took action to petition the District Court of Puerto Rico to accept the Title III filing for the Puerto Rico Electric Power Authority, PREPA, by its acronym in Spanish, and conditionally approve a Title VI certification of the Restructuring Support Agreement for the Government Development Bank of Puerto Rico under Title VI of PROMESA. Administrative matters. I am pleased to introduce and welcome Colonel Noel Samot, who was recently appointed by the board as Revitalization Coordinator after consultation with the Governor. Mr. Samot was selected after an extensive search process and brings more than 25 years of experience in aerospace and defense industries. We are convinced that Colonel Samot will add great value to our economic development agenda and broaden Puerto Rico's competitive field. We look forward to Noel taking full advantage of Promesa's Title V critical project initiatives and working in coordination with the government's critical infrastructure team. Welcome to the board, Noel.
Mr. Chair, I would like to present a motion to ratify recent actions taken by the board, and the proposed resolution will read as follows. The board confirms and approves the following unanimous written consents adopted by the board since the adjournment of the board's last public meeting. Number 1, unanimous written consent dated July 11th, 2017, approving revised compliant budget for the Commonwealth of Puerto Rico as corrected. Number 2, unanimous written consent dated July 12, 2017, approving certified fiscal plan for the Government Development Bank for Puerto Rico as revised. And number 3, unanimous written consent dated July 12, 2017, approving authorization of the Government Development Bank for Puerto Rico and certification of the restructuring support agreement pursuant to Title VI of Promesa.
Mr. Chair, I'd like to second the motion.
I'd like to ask for a voice vote. Those in favor, please say yes.
Yes.
Yes. Arthur? That's a problem.
That's a nay.
David, Arthur?
Yeah.
Want to come back?
Well, let's wait for it. Because then we have another.
Just wait.
Little technical difficulties.
That's what I was thinking.
See how?
All right. We have the majority of folks here, so when they come back on, we'll circle back to that vote. But in order to move forward, those in favor, please say yes.
Yes.
Yes. The resolution passes with the majority of members present.
Mr. Chairman, I would like to make the following motion. Between the adjournment of this meeting and the opening of the board's next public meeting, the board may consider in executive session any and all matters that it is authorized to consider under PROMESA, including 1, any certification determinations authorized PROMESA, including certification determinations under Section 206 of PROMESA. Second, any submissions or authorizations authorized by PROMESA. And third, any filings authorized under Title III of PROMESA in each case that are set forth as part of the vote to convene such executive session. The board may also act by unanimous written consent between meetings in accordance with the bylaws, with such consent to include consent by email.
Mr. Chair, I will second that motion.
Yes, I'd like to ask for a voice vote. Those in favor of the motion, please say yes.
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 Yes. Yes.
David and Judge Gonzalez, would you be voting affirmatively as well for the motion that Ana Matos Santos previously presented?
Yeah. Yes.
All right, so that would also let the record reflect that resolution passed unanimously. All the members having voted in favor of the motion, the resolution is approved and has passed unanimously. Now I would like to ask Ana Matos Santos to give us a report on the actions the board took Wednesday to commence an independent investigation of Puerto Rico's debt.
Thank you, Mr. Chair. As you're aware, and as the board announced on Wednesday, the board intends to initiate a comprehensive investigation of Puerto Rico's debt and its relationship to the fiscal crisis, consistent with the procedures for conducting PROMESA investigation adopted by the board on May 26, 2017. The investigation will include a review of the fiscal crisis, its contributors, an examination of Puerto Rico's debt and issuance and its issuance, including disclosure and selling practices when issuances of prior debts. The board will conduct this investigation pursuant to the authority granted to it by Congress and the President on the Promesa. As you know, the board has been specifically given the authority by Congress on the Promesa to conduct an investigation into Puerto Rico's debt and its connection to the current fiscal crisis. We consider this investigation an integral part of our mission to restore fiscal balance and economic opportunity and to promote Puerto Rico's reentry to capital markets pursuant to our responsibilities under law. To carry the investigation forward, I recommend that a special committee of the board be established for the purposes of, among other things, developing in more detail the scope of the investigation and appointing an independent investigator to carry out the investigation.
Thank you, Ana. Following up on your recommendation and pursuant to Section 3.9 of the board's bylaws, I would like to proceed to establish the special committee of the board that will be in charge of this investigation, and hereby designate and appoint board members Judge Arthur Gonzalez, Ana Matosanto, Professor David Skeel, and myself to constitute such special committee.
Thank you, Mr. Chair. As we continue to develop the parameters of the investigation and move forward with the appointment of independent examiners, I think we should be providing this information, and I think that as required on the Promesa, we should make the findings from this investigation public.
So noted. Now let's proceed to the presentation of the proposed fiscal plan for the Public Corporation of the Supervision and Insurance of Cooperatives, COSEC. I would like to welcome once again Mr. Jerry Portela, the Executive Director of the Puerto Rico Fiscal Agency and Financial Advisory Authority, who will present the proposed fiscal plan for the Public Corporation for the Supervision and Deposit Insurance of Puerto Rico, COSEC. After his presentation, the board may proceed to ask questions about the proposed fiscal plan. Welcome, Jerry.
Good morning to all members of the Financial Oversight and Management Board of Puerto Rico, Executive Director Nelly Jaresco, advisors, and general public in attendance. Before you, Roberto Portela Franco, Executive Director of the Puerto Rico Fiscal Agency and Financial Advisory Authority, or FOMB. Today we'll be discussing the fiscal plan for the Corporation for the Supervision and Insurance of the Cooperatives, better known as COSEC for its Spanish acronym. Sorry. COSEC, though designated as a covered entity by the Oversight Board, has not issued public debt, is not a debtor of obligations that require restructuring, has no structural deficit, and is able to pay all operational expenses, and is not dependent on the central government funds. COSEC is the insurer of deposits and shares in the savings and loans cooperatives, or cooperativas, and in such capacity faces heightened risks related to the claims from insured clients of cooperativas due to potential substantial losses at cooperativas that invested in bonds issued by the government of Puerto Rico and its instrumentalities, and or a runoff of client deposits and shares due to a perceived lack of confidence in the strength of the cooperativas. Those risks are shared by traditional financial institutions as well. The cooperative movement has a strong following in Puerto Rico, with 116 cooperativas holding around $7.9 billion of deposits and shares for nearly 1 million customers. This compares approximately to $45 billion of deposits held by banks operating in Puerto Rico. COSEC has an adequate capital to perform its regulatory and insurance duties under ordinary and relatively stressed scenarios. Cooperativas have gained popularity in Puerto Rico as customers feel a greater sense of loyalty to their local institution, especially given that the co-ops are owned by their members or socios rather than stockholders. For FOMB and COSEC, it is of great importance to collaborate with the government and the Oversight Board's efforts to proactively seek alternatives to strengthen the savings and loans cooperativas through reforms and other actions that will support the cooperativas and their key involvement and participation in the economic development of Puerto Rico. Additionally, COSEC and AFOF, in collaboration with the Oversight Board, have requested technical assistance to the National Credit Union Association to further strengthen the cooperativas and make it a more robust and strong financial sector in Puerto Rico's economy. Puerto Rico's economy needs to safeguard the diversity of capital structures offered by the cooperativas to ensure a balanced, responsible, and sustainable economic model going forward. The fiscal plan analyzes COSEC's financial condition and its ability to meet the challenges that may be posed by the Puerto Rico bond renegotiation and set forth structural reforms that strengthen COSEC's governance and regulatory powers. This fiscal plan is motivated by the potential role of cooperativas as a community-based financial institution, and the measures contemplated therein are designed to increase their capacity and efficiency in providing services to their members or socios. They provide financial services to their members that contribute to our economic development, while abiding by cooperative principles that emphasize the importance of service to the community and a democratic control. Now I will leave you with Mr. Alejandro Camporreal, Chief Operating Officer of AFOF, who will present to the Oversight Board a summary of the COSEC fiscal plan.
Good morning. Before I begin, I would like to point out that COSEC is currently directed by the Cooperative Development Commissioner, Ms. Ibelis Torres. The Commissioner has excused herself from this board meeting as she is currently attending previously scheduled personal matters. Today, COSEC is represented by Mr. Pedro Roldan, Assistant Vice President, and Mr. Jorge Arroyo, Senior Analyst and Special Aide to the Executive Director, who are here with us to answer any technical inquiries that the board may have, and I would ask them if they could come forward and sit here with us. Now, to begin, COSEC main roles include insurer of deposits and shares up to $250,000. 2, regulator of all savings and loans. Perfect. 2, regulator of all savings and loans cooperatives and non-financial cooperatives. And 3, promoter of the cooperative model. COSEC does not have a structural deficit and comfortably covers its operating costs, including employee benefits. It is not dependent on general fund, but on premiums paid by member cooperatives and interest on its investments. Now, as said by Mr. Portela, COSEC's risk is mainly driven by external factors and reputational risks that stem from the fact that some of the cooperatives have high concentration risk in Puerto Rico bonds, and the reduction in value of said bonds due to a renegotiation may impact these cooperatives' capital and income. Although recognized as a serious risk, this fiscal plan confirms that COSEC has the ability to withstand the impact of the renegotiation under relatively stressed scenarios. The cooperative system is a pillar of the Puerto Rico economy, serving as the main alternative to the commercial banking sector. While its funding sources have remained stable over the years, the cooperatives have been able to grow their asset base. System assets experienced 5% growth between fiscal year 2012 and fiscal year 2016. This was primarily due to a $400 million increase in loan balances, while cash and other assets remained flat. Some cooperatives are heavily invested in securities issued by the Puerto Rican government and in its instrumentalities. Although the cooperative system's loan portfolio has been performing adequately, showing great resilience during the economic recession, there is a high degree of concentration in Puerto Rico debt along the cooperative system that could compromise the solvency of some cooperatives. Puerto Rico government securities account for approximately 65% of the cooperative's total investment portfolio. In order to gauge COSEC's ability to withstand a Puerto Rico debt renegotiation among its members, the COSEC team, along with the FOF and the Fiscal Oversight Board's guidance, performed 4 different stress tests in this fiscal plan. These stress scenarios were completed in accordance with the guidelines set by the Fiscal Oversight Board. The first analysis, the Capital Reserve Report. This is the actuarial report that measures the sustainability of cooperatives based on the ability to amortize the government securities losses over time by projecting historical return on asset. During the second half of fiscal year 2017, COSEC's management requested an updated version of this actuarial report with fourth quarter 2016 financial data and the market value of its investments as of April 2017. The second analysis was based on the same report. Net reserves were impacted by subtracting total Puerto Rico debt losses instead of its amortized amount under regulatory accounting treatment provided by Act 220. Third analysis, a short-term liquidity analysis stressing the cash and equivalent items available to cooperatives, subtracting cross deposits among cooperatives, and under different deposit runoff scenarios in order to project possible individual needs. Then the fourth analysis, which we call the NCUA analysis, it was replicated by COSEC. The NCUA performed an analysis of the Puerto Rico cooperative system in March 2016. COSEC updated the report to include the market value of Puerto Rico government securities as of April 2017 and the most recent data available for all insured cooperatives. This analysis combines capital and liquidity considerations, so it combines the contents of the first 2 analyses. All scenarios reinforce that under current regulatory framework, COSEC will have the adequate capital to perform its duties even under relatively stressed scenarios. COSEC also created a liquidity vehicle to strengthen its position. The newly created co-op self will provide depositor confidence and ensure the long-term sustainability of the co-op system and the corporation. The program is designed to aggregate and organize system-wide resources to be deployed to strengthen the capital base of individual cooperatives and provide additional liquidity if needed. The initial proposal, totaling $533 million in combined commitments, is comprised of approximately $383 million available for capital injections and an additional $150 million for liquidity in exchange for loan assets. The program will also aim to steer the system towards a path of long-term sustainability. The oversight and implementation of the program will be administered by the Cooperative Technical Financial Task Force, as per a memorandum of understanding which will be executed. Under the MOU, the parties will exchange information and provide assistance in connection with the monitoring of the financial situation, crisis management, recovery, and mitigation. Simultaneously, a governance reform must be implemented. As part of the new governance model, a committee will steer COSEC while its fiscal plan is in effect and being implemented. This committee shall exercise all powers granted to COSEC's Board of Directors by virtue of any other law or regulation of the Government of Puerto Rico. The committee shall be the operating arm spearheading reforms and other actions to further strengthen the cooperative system and the corporation, and ensure an effective and timely execution of the fiscal plan measures. In summary, the plan 1. Confirms COSEC's capacity to perform its regulatory and insurance duties with adequate capital to support the system under ordinary and relatively stressed scenarios. 2. Implements the right governance structure to steer COSEC through the current challenges and implementation of necessary reforms. 3. Establishes a coordinated liquidity and capital response through the co-op self-initiative with system-wide resources. We are certain that COSEC fiscal plan addresses system weaknesses with the utmost responsibility and that it aims to maintain the cooperative system as one of the main pillars of the economy. This administration strongly believes that the measures set forth for the consideration and approval of the board will comply with the requirements in PROMESA while improving COSEC's role through enhanced oversight and stronger governance structure.
Thank you very much, Mr. Camporeal. Do any board members have any questions for the management of COSEC or Mr. Portela or Mr. Camporeal from FOMB?
I do, but I'll follow other members if they have questions.
No, Mr. Garcia.
And my first question is, could you please expand on what's going to be the composition of that new committee and what would it entail for that committee to be implemented, and what's the timing that you currently envision for that committee to be in place?
The committee will be comprised of 3 members. One will be the Cooperative Development Commissioner and Chairman of the Board of Directors of COSEC. Second will be the Commissioner of Financial Institutions of Puerto Rico. And third, the Executive Director of FOMB.
Thank you.
No, thank you. I have a question, Masato.
Can you, the information you shared around the fact that 65% of COSEC's assets are invested in Puerto Rico securities was striking. Can you talk to us a bit more about the stress case scenarios and how they've been incorporated into the fiscal plan?
Well,
For continued liquidity?
first, it's not 65% of COSEC's assets. COSEC's investment portfolio
Investment portfolios, all right.
does not have a high concentration of Puerto Rico investment. It's more the stress tests. The stress tests were performed throughout the cooperative system. Taking into account that cooperative members have individual investment policies and portfolios. There were 4 stress tests that were performed. The first one takes into account a special Act 220, which allows for 15-year amortization of losses in Puerto Rico investments, which are classified as special investments. The second one is it does not take into account that cushion, that 15-year period of amortization, and is obviously a more acid test than the first one. The third one then took into consideration different runoff scenarios. Historically, the runoff percentage has been fairly low, under 3%, but we were very conservative and stressed it even more into 5, 10, 20% scenarios, and still COSEC had enough capital to withstand such runoffs. Of course, there's a timing issue and something that cannot be predicted in terms of timing and the necessity, but it was taken into consideration in the stress test, and again, it reflected a very good resilience from COSEC's perspective. And then the fourth analysis, which is the one that replicates NCUA exercise, takes into account both scenarios, the capital stress and the liquidity scenario, and it combines them, and it paints a picture of a relatively strong COSEC ability to respond to a possible scenario of stress. And in addition to that, that's why we created that co-op self instrument, so we could raise capital and liquidity if it was necessary after navigating through the emergency situation.
And sorry, I just want to double back on the liquidity point, because I was referring to the statement on page 13 of the fiscal plan where you talk about Puerto Rico government securities accounting for 65% of the total investment portfolio, and I want to understand your expansion is the issue that's not necessarily, that is an issue in particular cooperatives and not necessarily
well, yes. The 65%, it takes into account the total cooperative. Okay. So it's not necessarily, one cooperative might have more concentration than other, and that is the case. Not all cooperatives are created equal. Some cooperatives may show weakness, but it's totally unrelated to any type of investment. It's more of a business as usual type of deal. So it is important that it is highlighted that not all cooperatives are under the same situation.
Can you talk to us a bit more about NCUA and the technical assistance and work they've provided to date, and some of the sense of how they might assist going forward?
Yes. Well, NCUA, we sent a communication and we established some cooperation with regards to technical assistance. And technical assistance in this sense means more of support for an aspirational transition of COSEC to move to a more robust governance structure, to a more robust examination process, to establish more controls and to ensure that these situations that have occurred in the past don't occur again. The technical assistance has been offered, but we are still in the conversation periods and looking to see what the opportunity is and what we can gather from them and collaborate.
I would like to add and go back to the 65%, Anna. Basically, Ms. Santos, it's around 976 million approximately. The investment portfolio comprised of around 90 cooperatives. But a very important fact regarding this stress scenario is that GDB, which represents approximately 44% of that portfolio, is, we're not including the RSA, we're not including the uptick on the pricing of the bonds. It's basically an amortized cost of 60%. So, and the scenario passed. That basically all scenarios were reinforced that COSEC will have adequate capital. So, just wanted to add to that as well.
Great, and you mentioned the SELF program and other efforts embedded in the fiscal plan to ensure the continued assets there. So appreciate that. Thanks.
Yep. If I may, I would like to ask the executive of COSEC if they could give us just a general overview of how they feel that is the current status of the cooperatives as a whole. I mean, where do they see issues right now? What are they doing on a proactive basis, on a day-to-day basis to deal with it? And also about their commitment to the implementation of this fiscal plan.
Good morning. Basically, what we're doing right now is monitoring liquidity capacity of the cooperatives on a weekly basis. Some cooperatives may be having a little bit of trouble meeting their standards and their deposits, but right now there's not a big issue on that. Last year, there was a run on deposits around April. It was below 2.4%. It wasn't all cooperatives were able to manage that run quite well. And right now, about the biggest issue is, like we said in the fiscal plan, is on the Puerto Rico bonds. That's the main issue with cooperatives right now.
Could you speak in general of the total number of cooperatives? I mean, how many do you feel that are facing liquidity issues as a whole?
As of this moment, maybe about 5 cooperatives might have a liquidity issue, and we're dealing with them on a daily basis. Right now, we're trying to implement with them some consolidations. Voluntary consolidations, so a bigger cooperative can absorb the smaller ones. Right now, there's not a major concern about these cooperatives.
Yes, I would like to add to that even in not having the fiscal plan certified, COSEC has the legal capacity to enforce a lot of powers that allow them to intervene and to manage or administer any cooperative that faces liquidity or capital issues. So the framework is there. It's more that our goal with this fiscal plan is to strengthen the ability to execute those powers in law. So they are, in fact, already implementing some of the preventive measures.
And does COSEC feel that the fiscal plan, as is being currently presented to the board, will give them additional tools to be able to deal, with some of the challenges that the cooperatives are facing at this point?
Yes, we do.
And are you also committed to the implementation of this plan?
Yes, we are very committed to the implementation of the plan once it's certified by the board.
And my last question is, could you take us and review how the funding of the COSEP, the Co-op Self program will be obtained?
Yes. Essentially, the Co-op Self vehicle would include the COSEC available cash, which is, COSEC has 122.5 capital available. It has 107.9 million in reserve for expected losses, which are already recognized in 2006 financial statements. It has an additional $52.5 million in reserve for unexpected losses. And then there is the opportunity to enter into an agreement in which Bancoop would compromise or pledge additional cash and the compromise to purchase loans up to $150 million for a total of $533 million in additional capital that could be readily injected into the system.
Well, thank you for your responses, and I have no further questions, Mr. Chair.
Just, appreciate, the stress test, the attention that you're taking to this matter. I'm a 15-year credit union consumer on the state side of the equation, and big believer in the credit union system and their role in the overall banking. Looking at the exposure and the interrelatedness with where the assets are invested, and the interrelationship with the overall debt restructuring situation we find ourselves in, as well as overall the economic situation and the stress. Appreciate the efforts to date, and we'll be thinking closely about Natalie's assessment of this and steps that might be necessary to ensure that there's adequate support oversight in place to ensure a continuous stable system.
Thank you, Ms. Matos Santos. Any additional questions from members present? David, Arthur, any questions? Then I would like to ask our executive.
I don't have any, thank you.
Yeah, thank you, Arthur. Then I would like to proceed to ask our executive director, Ms. Natalie Jaresko, to walk us through the process by which the board reviewed and assessed COSEC's proposed fiscal plan and present to the board certain recommendations regarding the same.
Thank you, Mr. Chairman. The board and its advisors reviewed COSEC's proposed fiscal plan for compliance with PROMESA and with the same principles against which we have evaluated the other fiscal plans. Compliance with PROMESA, meaning the successful fulfillment of Section 201 of PROMESA, which outlines 14 statutory requirements all fiscal plans must achieve. Adherence to the principles outlined by this board for a once-and-done approach, which ensures that the plans achieve sustainability and balance without further measures not already included in the plan. As was noted, COSEC has not issued any debt and is not a debtor of obligations that require restructuring. As the insurer of Puerto Rican cooperatives, however, COSEC may face higher demands on its resources as the institutions that it covers are affected by losses on the Puerto Rican debt that they hold as investments. COSEC has modeled aggressive stress scenarios comparable to previous analyses done with federal assistance. While the board and its advisors recognize the economics of COSEC's plan and the reserves it has set aside for assisting cooperatives, additional modifications are needed to ensure the long-term stability and proper regulation of the cooperative system. We wish to stay ahead of any potential problems. So first, the plan should reflect the impact of a more extensive and realistic resource plan based primarily on those updated stress scenarios. The fiscal plan should be amended to include a detailed implementation plan with dates for the co-op self-program that is also based primarily on the updated stress scenarios and includes sufficient human and financial resource requirements, internal and external, necessary for the success of the program. Second, the fiscal plan should be amended to include a reform plan that redefines the mission and governance of COSEC to eliminate conflicting regulatory and insurance missions and captive governance, or moves cooperatives to federal charters and oversight under the National Credit Union Administration, NCUA, or other agency with expertise in the financial supervision field, such as the Office of Commissioner of Financial Institutions of Puerto Rico, or that reforms the cooperative charters to reflect oversight and methodologies comparable to those of the NCUA. Third, the fiscal plan should be amended to outline the scope of activities that should be addressed through requests for external assistance from federal agencies or through the use of external contractors. In addition, current law limits COSEC's ability to provide the necessary and adequate help to cooperatives that may need it. COSEC, AFAF, and its advisors have identified the legislative changes that will enable COSEC to provide the regulatory assistance required to mitigate the effect of any losses on Puerto Rican debt. The board has also worked with the government and its advisors to identify the best way to ensure independent, unbiased decision-making necessary to deploy COSEC's program. To support that program, the fiscal plan must be modified to incorporate the following amendments that describe legislation the government will submit to the legislature. First, the COSEC's Enabling Act be amended to provide that during the implementation of the fiscal plan, the government will constitute a committee composed of the president of the COSEC board, the executive director of AFAF, and the commissioner of financial institutions, as Mr. Portela said earlier, in order to ensure independent management and decision-making of COSEC's assistance program. The committee should marshal the regulatory and supervising expertise of the Office of the Commissioner of Financial Institutions to assist with the implementation of the fiscal plan. The committee shall supersede the COSEC board, and its powers will be exercised by a majority of its 3 members. The committee will be in effect during the implementation of the fiscal plan. Second, to facilitate the assistance program described in the fiscal plan, that the Cooperative Savings and Credit Unions Act be amended to authorize a cooperative to issue preferred shares in an amount in excess of the amount of its common stock. In addition, that the Act and the COSEC Enabling Act be amended to expressly authorize COSEC to sell the assets of a cooperative to a non-cooperative entity in the event that COSEC orders the liquidation, consolidation, or merger of such cooperative. Third, that Act 220 of 2015 must be amended in order that COSEC's regulatory powers over a cooperative are not limited in any way due to a cooperative's investments in bonds or notes issued by the Commonwealth or its instrumentalities. In light of these findings, I'd like to recommend that the board certify the COSEC fiscal plan with these amendments to provide a more detailed implementation plan, to outline a more robust vision for long-term reform, and to describe and submit the necessary legislation that will enable COSEC to assist cooperatives to its fullest capacity.
Thank you, Mr. Esco. Before we move on to the public comment section, another question would like to be posed by the member Mato Santos.
Sorry, Mr. Esco, it's a follow-up question. Appreciate your work in analyzing the fiscal plan and the recommended suggestions, changes here. Anything else that we need to be keeping in mind to ensure that we're staying ahead of this and that we are keeping the interest of depositors, that COSEC is keeping the interest of depositors first and foremost as it thinks about carrying out its duties?
I think besides the legislation and these amendments to the fiscal plan, what is going to be most critical is implementation and having a specific plan with specific named persons and dates to ensure that we are working on time.
Thank you.
Thank you.
Thank you both. Now I'd like to open the floor for public comments. Each person will have up to 3 minutes to express their views. Any person interested in a turn, please stand up. And once I recognize you, we will turn the microphone on, and you will begin your questions or exposition. Please state your full name and your affiliation if you have one, and speak as clearly as possible.
Good morning.
Good morning.
John Mudd, and I have a question as to the, there's $533 million, and I was wondering if that's to cover the deposits of the credit union members. Number one. Number two, has there been any evaluation of the probability of the RSA, if it is approved, to it continue payment, since it depends on the municipalities and the public corporations on paying their debts?
The 533 million that you mentioned, yes, it does cover deposits as well as any capital shortfalls resulting from any restructuring of the Puerto Rican debt.
In terms of, I think expressed this earlier, the stress scenarios did not include the RSA for GDB. As of right now, we're in the midst of the legislation for GDB RSA, and we're planning accordingly to close this transaction in the next few months.
Thank you. Anything else, Mr. Mudd?
Well, with all due respect, the last answer was not an answer at all, but that's okay.
Any additional questions from those present? Very good. Let's proceed to discussion and consideration for the certification of the proposed fiscal plan for the Public Corporation and Supervision and Insurance Cooperatives, COSEX. In light of the importance of the decision by the board that will be taken today, I would like to ask for any board members that would like to express any additional views. Let's begin with the representative of the Governor of Puerto Rico. I would like to offer that opportunity to Mr. Cristian Sobrino.
Thank you, Mr. Chairman. I'd like to first congratulate the teams at AFAF and the team of COSEC who have worked for the past months to prepare a fiscal plan that adequately protects the cooperativa movement in Puerto Rico, which is key to our economy. It is key to the communities throughout the island and provides credit and banking services to a large part of the population, more than 1 million members, and that has been relevant to every consideration we've had in other parts of the government, including GDP and the central government. To this extent, I think that they have done an outstanding work, and the implementation of their fiscal plan will be carried out in an effective manner. So thank you again, Jerry, Dino, and the COSEC team.
Thank you.
Thank you, Mr. Sobrino. Would any additional board member like to speak and express themselves regarding this topic? On the basis of the report presented by the board's executive director on the proposed fiscal plan for COSEC and her recommendations, including the proposed amendments summarized in her presentation, the chair requests from the executive director whether she would like to propose a resolution for the board to consider and vote upon.
Yes, Mr. Chair, I'd like to propose a resolution and request that Mr. El Khoury read the same into the record.
Whereas on June 30, 2016, the Federal Puerto Rico Oversight Management and Economic Stability Act, PROMESA, was enacted, and whereas Section 101 of PROMESA created the Financial Oversight and Management Board for Puerto Rico, and whereas Section 201 of PROMESA establishes a multi-step procedure for the development, review, and approval of fiscal plans for covered territorial instrumentalities, requiring that 1, the proposed fiscal plan be submitted to the board, 2, the board must review the proposed plan and determine whether it satisfies PROMESA's requirement or that it does not, in which case the board must issue a notice of violation and recommended revisions, giving an opportunity to correct the violations. 3, revised proposed plan to be then submitted to the board, and 4, if there is a failure to submit timely a proposed plan, the board determines in its sole discretion satisfies PROMESA's requirement, the board shall develop and submit to the governor and the legislature its own compliant fiscal plan. And whereas on August 1st, 2017, the board received a proposed fiscal plan for the Public Corporation for the Supervision and Insurance of Cooperatives, COSEC, and whereas after reviewing the proposed plan with the governor's representatives and analyzing and deliberating over it with the board's members, economists, consultants, and attorneys, the board recommended revisions to the same and gave the governor's representatives the opportunity to revise the proposed fiscal plan. And whereas representatives of the governor and the board's experts, consultants, and attorneys engaged in extensive discussions about the proposed fiscal plan and the board's concerns about the plan, resulting in further changes incorporated into the proposed plan. And whereas on August 4, 2017, the board held an open meeting at which the governor's representatives presented the final proposed fiscal plan to the board and the public, and whereas the board has had the opportunity to consider the latest proposed plan and discuss it with its experts, consultants, and attorneys, and believes that with certain amendments, the plan complies with PROMESA. And whereas the board provided an opportunity for public comment on the proposed fiscal plan and on the board's recommended modifications to such fiscal plan, and whereas after substantial deliberations, the board has determined to approve and certify the latest proposed plan as modified by the following amendments. Amendment number 1, impact of a more extensive and realistic resource plan based primarily on updated stress scenarios. The fiscal plan should be amended to include a detailed implementation plan for the co-op self-program that is also based primarily on updated stress scenarios and includes sufficient human and financial resource requirements, internal and external, necessary for the success of the program. The plan should confirm the ability to deploy resources and the processes for coordinating with internal and external partners, define decision-making process for deciding and prioritizing liquidity or capital infusions, cooperative consolidation or wind-down resolutions, address the potential for greater scope and speed of intervention due, and define a contingency plan if requirements for capital and liquidity assistance exceed COSEC and partners' resources. Amendment number 2, long-term vision for reform. The fiscal plan should be amended to include a reform plan that redefines the mission and governance of COSEC to eliminate conflicting regulatory and insurance missions and captive governance, or moves cooperatives after completion of the COSEC assistance program to federal charters and oversight under the National Credit Union Administration, NCUA, or another agency with expertise in the financial supervision field, such as the Office of Commissioner of Financial Institutions of Puerto Rico, or that reforms cooperative charters to reflect oversight and methodologies comparable to those of the NCUA. The goal should be a once-and-done approach to structural reform for both COSEC and the cooperatives it supervises. Amendment number 3, engagement with external partners. The fiscal plan should be amended to outline the scope of activities that should be addressed through requests for external assistance from federal agencies, including the NCUA, the Office of the Commissioner of Financial Institutions of Puerto Rico, or through use of external contractors. This amendment should indicate the scale of external help needed, should resolve problems in the system-wide, and the sources and mechanisms for contracting should federal help be unavailable or inadequate. Amendment number 4, governance reform. The composition of COSEC's board of directors, the COSEC board, may result in conflicts of interest that could prevent COSEC from primarily exercising its regulatory powers. Therefore, Act 114/2001, as amended, the COSEC Enabling Act, must be amended to provide that during the implementation of the fiscal plan, the government will constitute a committee composed of the president of the COSEC board, the executive director of the Puerto Rico Fiscal Agency and Financial Advisory Authority, FOMB, and 3, the Commissioner of Financial Institutions of Puerto Rico. The committee shall marshal the regulatory and supervising expertise of the Office of the Commissioner of Financial Institutions to assist with the implementation of the fiscal plan. The committee shall supersede the COSEC board, and its powers will be exercised by a majority of its 3 members. The term of the committee should be coterminous with the implementation of the fiscal plan. Also, to avoid any statutory inconsistencies, any possible authorities of the Cooperative Development Commission created under pursuant to Act 247-2008 related to COSEC shall be dormant while the committee is in effect. Amendment number 5, Co-op Self-Program, Access to Liquidity. To facilitate the Co-op Self-Program described in the fiscal plan, Act 255-2002, as amended, the Co-ops Act, must be amended to authorize a co-op to issue preferred shares in an amount in excess of the amount of its common stock. Moreover, to provide the cooperative system access to more sources of liquidity, the COSEC Enabling Act and the Co-ops Act must be amended to expressly authorize COSEC to sell the assets of a co-op to a non-co-op entity in the event that COSEC orders the liquidation, consolidation, or merger of such co-op. Amendment number 6, COSEC's oversight authorities relating to a co-op's holding of government securities. Act 220-2015 must be amended in order that COSEC's regulatory powers over a cooperative are not limited in any way due to a co-op's investment in bonds or notes issued by the Commonwealth or its instrumentalities. Implementation plan and revised fiscal plan. The government shall present to the board a plan to implement the above amendments by not later than 30 days from the date of adoption of said amendments, and a revised fiscal plan that complies with the measures described in said amendments, no later than 15 days thereafter, which revised fiscal plan shall be subject to the board's approval. And now, therefore, it is hereby resolved that the board approves and certifies the latest proposed fiscal plan for COSEC pursuant to PROMESA Section 201E, as modified by the amendments described above, and it is further resolved that the board shall issue a compliance certification for such fiscal plan as amended to the governor and the legislature pursuant to PROMESA Section 201E. Thank you.
Mr. Chair, I'd like to move adoption of the resolution with the certified fiscal plan for COSEC as amended.
Mr. Chairman, I will second that motion.
I'd like a voice vote, please. Those in favor, please say yes.
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 Yes. Yes. Yes.
All members having voted in, thank you. All members having voted in favor of the motion, the resolution is approved and has passed unanimously. Now, let's move on to the discussion of pension reform. I would like to ask Member Andrew Biggs to give us an update regarding the work the board has been doing with respect to pension reform in Puerto Rico.
Thank you, Mr. Chairman. As you all know, when the board certified the Commonwealth's fiscal plan, we amended it to include changes to Puerto Rico's government pension systems as part of the board's mandate to provide for adequate funding of the public pension systems under PROMESA. These changes dealt principally with a system-wide overhaul to accomplish three things. First, to fund existing pension obligations on what's called a pay-as-you-go basis, which means that the government will pay benefits to retirees directly as those benefits come due, rather than attempting to pre-fund future benefits via a retirement systems investment fund. This aspect will be accomplished through recently introduced legislation. The following two aspects of pension reform will be accomplished via a plan of adjustment that the board is actively working on at this time. The second aspect is to enroll both active employees and newly hired workers in a true defined contribution retirement system, in which each employee has an individual account that segregates their contributions both from the government and from the funds of other employee accounts, and protects employees' contributions to pay for their own future retirement benefits. Finally, reform will ensure that all newly hired employees are enrolled in Social Security. While most Puerto Rico government employees pay into Social Security and will receive benefits from it when they retire, most teachers, police officers, and judges are not enrolled in Social Security. Enrolling newly hired employees and potentially current employees as old as age 40 in Social Security would provide those employees with a more solid and more diversified sources of income in retirement. Finally, the board's amendment to the Commonwealth fiscal plan provided for a reduction in pension benefit outlays of 10% by fiscal year 2020 to ensure the systems can meet their obligations. These pension benefit reductions would be enacted in a progressive manner, with protections to ensure that no retiree is pushed below the federal poverty line as a result of these reductions. In sum, the philosophy behind our approach is we're trying to end the government's decades-long practice of making promises for pensions that it is not able to keep. The pension systems will not look as attractive going forward, but they'll be more solid and employees will be more confident that they can receive the benefits they've come to expect. As part of our continuing dialogue with stakeholders, representatives of the board previewed these changes with the advisors for the official retiree committee in the Title III case for the Commonwealth. To provide more detailed information, we have prepared and today are releasing an explanatory memorandum in Spanish and in English that describes the changes to the government's pension systems and provides clarity with respect to the various aspects of these measures.
Thank you, Andrew. I neglected to thank Mr. Portela and Mr. Campo Real and his colleagues from COSEC for their presentation, so thank you very much. Thank you, Andrew, for presenting the board's position. And now, Mr. Christian Sobrino would like to comment on the board's position.
Thank you, Mr. Chairman. I'd like a moment to comment on the public policy of the government of Puerto Rico regarding pension reform, as is being included in the legislation that's being worked now through the legislative process locally. The key aspects of the Puerto Rico pension system reform included in the bill provide for the protection of workers from the imminent insolvency of the retirement systems. The employee retirement system would become insolvent in August, and the teachers' retirement system would become insolvent in September otherwise. The government is committed to funding 100% of accumulated benefits for teachers and government employees. Those people who have spent their life in service for Puerto Rico should be made whole. The new law is designed to assume the payment of pensions via the pay-go system, which maintains benefits accumulated through the date the law is enacted for all employees. For teachers, the defined benefit remains as is. The payment of pensions to existing retirees was assumed by the General Fund on July 1st, since the retirement systems are unable to meet the payments. In addition to the pay-go system, we will create a new defined contribution plan, much like a 401k plan in the private sector. This is specifically contemplated under our fiscal plan. Employee contributions to this new plan are already being segregated for this purpose and will be managed externally. Under this plan, the retirement savings of government workers and teachers in Puerto Rico will be segregated from government funds and managed by a third-party external manager with deep expertise in managing public pension funds. The fund manager will be selected as part of a competitive process. It will be the employer's responsibility to segregate these funds, and the government of Puerto Rico will have no access to them. In fact, the employer can be personally liable if the funds are not segregated. Relocate all retirement system employees as part of a right-sizing measure of the administrative function, and the employees who work at the retirement system will be relocated to other government agencies through the use of the single employer government labor reform that was recently enacted. As part of this initiative, we are establishing the Retirement Committee of the Government of Puerto Rico as an 11-member committee made up of both public and private sector representatives. As Executive Director of FAF, Jerry Portera will serve as President of the committee. That is what is included in the bill, and I thought it was adequate to include that in the public discussion today.
Thank you very much, Mr. Sobrino. Would any additional board members like to comment?
I'd like to speak to that. I appreciate the public policy interest in honoring 100% of pension obligations and commitments made to date. I find that interesting in light of the fact that the initially submitted fiscal plan assumed a reduction in pension benefits, and the certified fiscal plan that the board is operating from and that all of us are operating from, as it is the plan that is certified, decidedly reflects the amendments that were adopted, which include, a 10% reduction as outlined by Mr. Biggs and as will be further described in the paper that is going to be released later today. I, appreciate the interest in maintaining retirement security. I appreciate the fact that the retirement benefits average around $14,000, and the role of those retirement benefits in terms of the expenditures by retirees in Puerto Rico, as well as the contributions that have been made. It's good that contributions are now being segregated as recommended by the board and as reflected in the budget going forward. But unfortunately, we find ourselves in a situation where honoring 100% of the obligations is not workable, or equal treatment of all of the different folks who have received promises from the government of Puerto Rico and are not in a position for those to be honored. I think the package is outlined by Mr. Biggs that is consistent with the certified fiscal plan and with the amendments that were adopted with consent at the time, is the responsible way of moving forward to ensure that promises are aligned with available resources and that they're honored on a going forward basis.
Thank you, Ms. Matosanto. Would you like to comment on that, Mr. Sobrino?
Yes. We will be honoring that. I have established what is the public policy of the government of Puerto Rico. It will be legislated. It will be part of the law of the land here, and we will comply with the funding requirements necessary to keep those promises. Again, we can have a discussion on that, but that is the policy of the government.
Well, thank you very much. Any additional comments from board members? Let's move on then to discussion of right-sizing measures in the Commonwealth Fiscal Plan. As you know, the board's actions I would like to turn to the board's actions to implement the right-sizing measures that we approved on March 13th of 2017 as part of the certified fiscal plan for the Commonwealth of Puerto Rico. By way of background, during the certification process of the Commonwealth Fiscal Plan, we agreed with the governor that a fundamental goal for promoting structural balance and achieving near-term liquidity over the next 3 years was to reduce the overall size of government. In discussing this problem, we agreed that reducing the size of government was important not only to achieve fiscal discipline, but also to encourage a greater share of private sector development and employment. In pursuit of these goals, we agreed that right-sizing would include reduction of subsidies and both personnel and non-personnel measures to be taken over 3 years to accomplish an overall 30% reduction in the government's operating expenditures. It was with these shared goals that on March 13th, 2017, the board delivered to the governor and the legislature its certification of the fiscal plan, subject to the inclusion of 2 amendments as part of the fiscal plan. One of those amendments, the furlough amendment, stated that the furlough program shall take effect on the 1st of July 2017 unless the board determined in its sole discretion that all of the following conditions have been met. Number 1, submission of an implementation plan with $851 million in right-sizing measures for fiscal year 2018, and number 2, submission of a liquidity plan with $200 million in additional cash reserves by June 30th, 2017. The board extended the deadline for receiving these plans from April 30th, 2017 to June 15th, 2017 to allow sufficient time to develop the implementation plans that are required by the agreed-to fiscal plan. The board has carefully reviewed the plans submitted by the government to determine whether they meet the criteria set forth in the agreed fiscal plan. In light of this background, I would like to ask our Executive Director, Ms. Jaresco, to describe our review of the government's plans and present the conclusions of the board regarding implementation of the right-sizing measures contained in the agreed-to Commonwealth Fiscal Plan. Ms. Jaresco.
Thank you, Mr. Chair. First of all, we recognize that the government has made significant progress in enacting meaningful spending controls to curb Puerto Rico's history of poor fiscal discipline and in demonstrating a commitment to bringing spending in line with Puerto Rico's dire fiscal reality. Notwithstanding these encouraging steps, however, I'd like to share the board's perspective on the path forward. When the board certified the fiscal plan for the Commonwealth of Puerto Rico, it did so under the belief that all of Puerto Rico's stakeholders not only hope for and deserve, but require material change to the way the government operates. The government has grown to an unsustainable and unaffordable size, and that trend needs to be reversed, starting now. The right-sizing measures were a strategic objective in and of themselves. Reducing the size of the Puerto Rican government is not only a means of cost containment, it is a path towards more reasonable management of and improvement in the quality of government services. To accomplish the step change that is necessary, we need to think differently. Simply put, we need to adopt a new normal. As with any major transformation, right-sizing the government will not be easy, and we need to think about not only what we are not going to do anymore, but also what we are going to do differently and how we are going to translate these changes into savings. The savings targets laid out in the fiscal plan for fiscal year 18 are just the beginning. The amount of right-sizing savings the government will need to achieve to meet its fiscal targets for fiscal year 19 and fiscal year 20 more than double. The only way the government will achieve these levels of savings is to begin now. not only removing the obvious areas of excess in agencies, but laying the groundwork for structural changes to the way it approaches the delivery of services, staffing, procurement, and other operating norms. It will be difficult to identify what needs to change and how, but it will be significantly more challenging to execute on that plan. We are pleased to see this government's efforts to change the status quo, but also acknowledge that all transformations of this scale have deep complexities and unforeseen hurdles. It is our goal to help ensure the administration is as prepared as possible for this effort, and the board has evaluated the submitted right-sizing plans in accordance with that objective. The board used a standard set of criteria to evaluate the right-sizing implementation plans described as follows. First, right-sizing efforts must have a clear path to implementation. Second, they must represent permanent and recurring savings. Third, they must ultimately lead to a sustainable reduction in the size of the government, either through reducing, eliminating, or otherwise changing the nature of services delivered. Let me explain what each of these means. A clear path to implementation includes the following. The source of savings is clearly identified and savings estimates are based on reasonable assumptions. Discrete steps to execution are outlined with a defined owner for each. The timeline to implementation is feasible, and the implementation costs are identified, including both one-time and run rate costs. To be recurring and permanent, the second criterion, the initiative must be characterized by one or more of the following: a statutory change, a regulatory change, an issuance of a permanent order, OMB strict controls or other centralized government controls, or obvious high switching costs, for example, capital investment that would make reversal difficult. To lead to a sustainable reduction in the size of the government, the initiative must exhibit a clear and direct impact on the number and nature of services provided and/or an improvement in the operating model that enables greater efficiencies. This includes the implementation of best practice operating models, for example, centralized procurement, elimination of non-critical services, or change in services or service level reductions to reflect fluctuating demand or a more realistic level of demand, for example, lower utilization of hospitals, schools with population decline, as recently reported by the Secretary of Education. Over the past months, we have worked closely with the government to understand and assess the plans they submitted on June 15th for right-sizing according to the criteria just described. Starting on the left side of the chart, with the right-sizing target of $851 million as described in the certified fiscal plan, we then add in the reserve reallocations to reach the revised target as agreed to by the government of $880 million. The government was able to demonstrate a clear path to recurring and permanent changes reflected through a reduction in the size of the government for $662 million of the $880 million. That $662 million is comprised of $188 million of savings derived from personnel measures and $33 million derived from additional non-personnel measures. And lastly, the government reduced a total of $441 million in direct subsidies financed by the central government. The government's effort to develop and share these plans is a strong indicator of the changing tide in Puerto Rico. Unfortunately, a gap of $218 million against the $880 million right-sizing target still remains, as shown in red. The government's recent announcement that it intends to implement an incentivized transition program, which could produce significant long-term savings, is an important and promising step in the right direction, if paired with the specifics of which government services will be discontinued, externalized, or implemented differently. Even under the most optimistic of scenarios, however, the incentivized transition program will not produce budgetary savings in this fiscal year 2018. Therefore, despite the encouraging news, it does not alter the board's conclusion that the furlough program is necessary this fiscal year to achieve the right-sizing targets in the fiscal plan. After careful and deliberate consideration, it is the board's determination that the government must plan for and execute a furlough program commencing on September 1st, 2017. The implementation of this furlough program must result in a net savings of at least $218 million for the fiscal year 2018. The board will be communicating in writing this determination to the governor. In light of the significant progress that government has made on right-sizing, we want to be clear that the furlough program being outlined here will have a far smaller impact on the average public employee than the one originally contemplated in the fiscal plan. To meet the gap in right-sizing initiatives, this would represent up to a 2-day per month furlough for all government employees, with the exclusion only of frontline police, and only for the period from September through the end of fiscal year 2018. This is in contrast to the furlough program that the certified fiscal plan had incorporated, which included 4 days per month over the course of the entire fiscal year. For the average government employee, the substantial work that was done by this government means a total of no more than 20 days over the remainder of the fiscal year versus what was originally envisioned as nearly 50 days. The board is therefore reducing the size of the furlough program, but not repealing it. As the government designs the furlough program, it is advisable that it adhere to the following principles: prevent adverse effect on public safety or critical health services, minimize the impact on any single government employee, including but not limited to requiring the participation of all government employees, with the only exceptions being those required to satisfy the principle of preserving public safety, and minimize accrued liability of deferred furloughs by establishing strict criteria for any deviation from a standard furlough schedule. Perhaps most important, we want to make clear that these furloughs are not permanent, and it is entirely within the control of the government to bring them to an earlier end. The furlough program required by the fiscal plan will remain active until 2 criteria are met. First, the required savings of $218 million have been achieved or are reasonably expected to be achieved based on actual fiscal year to date and projected fiscal year performance. And 2, the board determines in its sole discretion that the government has made material and sufficient progress toward identifying opportunities, developing the plans, and beginning to execute the transformational changes required to truly right-size the government, as I have previously described. Separately, I am announcing that the board is not taking any action or requiring that the government take any action with respect to Christmas bonuses at this time. However, we will be monitoring the government's progress on implementing right-sizing measures, including compliance with the furlough program, and make a determination regarding Christmas bonuses in September.
Thank you, Mr. Esco. A few of the members have some questions regarding your presentation.
Yes, Mr. Chair, if I may, I would like to ask a question of Ms. Jaresco. So aside from the $200 million in the liquidity plan that was one of the requirements of the amendment that, as I understand, the government has provided in line with the fiscal plan, how much confidence do you have in the financial controls with regards to the overall budget and the liquidity of the Commonwealth?
As we think about controls over budget and liquidity, there are 3 key things that matter to us: visibility, reporting that is accurate and timely, and effective management. Historically, Puerto Rico has not had adequate controls, which has been a critical contributor to the dire financial situation that Puerto Rico finds itself in today. And while the government has made progress against these objectives, where we are today is still very concerning, and there are still substantial gaps. Yesterday, the governor reported that the Commonwealth had $1.799 billion of cash on hand as of June 30th. While the board is pleased with the higher-than-expected liquidity balance, the significant variance to prior expectations highlights the need for more to be done to ensure transparency, timeliness, and accuracy of the cash forecasting and reporting. Further, to date, reporting has lacked critical analysis regarding the variances and the relationship between any one cash report and Puerto Rico's structural deficit.
I have a question. Following up on Mr. Garcia's question, Mr. Chair, I have a question.
Yeah, go ahead, Ms. Matos Santos.
Given your experience with turnaround efforts and what it takes to lead those, and as I appreciate your comments about the fact that thinking about it is hard, developing the plan is hard, but implementing is harder. Can you talk to us about what are some measures and some things that you think are effective in ensuring that, you know, the proof is in fact in the pudding?
In my experience, what's become clear here as time has progressed is that the Commonwealth is made up of an extraordinarily complex set of interrelated entities that in many cases are independently managed, and then others where there is some but never complete coordination. And right now, there is no single agency, no group, no person that is responsible for or has access to a complete picture of the financial standing and liquidity. As such, one of the largest gaps around controls that I recommend be addressed is the ability to have true transparency and centralized oversight over key budgetary and liquidity functions across the Commonwealth. When comparing the situation to other similar municipal corporate transformations, there have been multiple instances where an emergency manager or an interim treasury manager has been appointed to address these issues. Stepping back to beyond simply establishing appropriate control mechanisms, to provide the necessary transparency and visibility, it's essential that the government provides a liquidity plan for all the cash flow of the Commonwealth. To date, the information that is provided by the government has failed to provide a comprehensive picture of the liquidity flows across all Commonwealth entities, not just the TSA. In order to accurately track and evaluate performance, it's essential that consistent reporting be put in place across the Commonwealth that has sufficient detail to monitor and evaluate activity. And while some of the amount of reporting, some of this reporting has begun, and that is the good news, a roadmap needs to be developed for future reporting, because it's critical that we ensure that what we have produced is comprehensive, reliable, explainable, and relatable back from cash to budget, liquidity to budget.
Mr. Chairman, I really appreciate your comments, because I think it seems as it's important to have transparency, it's important to have information, but it's also, I'm always reminded of the fact that one data point does not a trend make, and understanding what, why, and what it means strikes me as the critical questions consistent with the 3 points that you outlined as important goals in ensuring fiscal discipline and fiscal management.
Mr. Sobrino, you will be recognized shortly. Mr. Garcia, do you have a comment?
Yeah, I mean, Mr. Chair, if I may, I believe that there's no doubt that it's critical to have a timely and comprehensive view of the government finances and the liquidity position to be able to achieve the shared goal that both the board and the government have, to be able to have as much transparency as visibility as possible. I mean, I'm pleased to hear about the efforts that are being conducted by the government and the progress that has been done, but it seems that we still require a whole lot more to be able to achieve that transparency. So upon considering the remarks by the board's executive director about the challenges that we're still facing with the Commonwealth, both budgetary and liquidity reporting, the oversight and controls, I would like to propose the following resolution. And that resolution would read as follows. Whereas the board is tasked with providing a method for the government of Puerto Rico to achieve fiscal responsibility and access to the capital markets, for which it is critical that the government improve its fiscal governance, accountability, and internal controls. Now, therefore, it is hereby resolved that the executive director shall, 1, develop and present to the board within 15 days proposals to implement mechanisms to ensure the effective 1, monitoring, 2, oversight, 3, transparency, 4, reporting, and 5th, controls in relation to the consolidated liquidity position and performance against budget for the Commonwealth of Puerto Rico, and to ensure compliance with implementation of the certified fiscal plan. 2, the executive director shall also consider and recommend to the board whether it should require the appointment of a central Commonwealth Treasury manager to oversee the implementation of the executive director's proposal.
There's a motion on the floor.
I'd like to second that motion, Mr. Chair.
You'd like to propose that the motion be approved. Mr. Biggs, would you second the motion?
I second the motion.
And then I'd like a voice vote, please. Those in favor say yes. Yes.
Yes.
Yes.
All the members having voted in favor of the motion, the resolution is approved and has passed unanimously. Now the chair would like to recognize Mr. Sobrino for some remarks.
Mr. Chairman, I will make my remarks, but I would like, as a member of the board, to have the same opportunity to ask the executive director certain questions before my remarks.
Go ahead.
Preferably they would have been before that resolution. Executive Director, can we agree that the liquidity forecast of the board in March was that the Commonwealth of Puerto Rico would have $230 million liquid by June 30th.
Yes, that was the forecast of the board at the time based on the lack of concrete information and controls that were in place at that time. And the fact that these two numbers differs is the point of this discussion.
And can we agree that the current liquidity shown by the government of Puerto Rico has demonstrated that that forecast by the board was wrong?
Yes, again, I repeat and underline, it was wrong because of lack of controls, lack of a system, and today we have another number, which we hope is more accurate, but we still have a situation where the lack of controls and system is in place.
Sorry, hold on one second. If I may, Ms. Jaresco, just a point of clarification. The forecast of $291 million was the forecast submitted by the government as part of the certified fiscal plan, so it was not a board forecast, just making sure we're working from the same set of data.
It was also part of the board forecast, and that is what I have been told by everybody involved, and I would appreciate...
Christian,
sorry, Executive Director,
the issue isn't whose forecast it is, it was the forecast.
It was the forecast. I would just
There's no
like my turn to ask questions and not have them interrupted. Can you tell me, Executive Director, do you think, in your opinion, that the senior leadership of the government of Puerto Rico now is committed to comply with the fiscal plan and to right-size government?
Mr. Sobrino, you just announced a pension policy that's in conflict with the fiscal plan, so I unfortunately have to say that, today you said you would not comply with the fiscal plan.
But with the right sizing of government, do you agree that we are committed?
I believe that you have commitment, but
Yes.
but you have not complied with the fiscal plan in terms of the submission of implementable plans by the date in the fiscal plan.
And can we agree that over the past weeks, we have been in works and discussions to establish the timeline and the reporting structure that you made reference to in your comments?
Yes.
Okay, so indeed, we have been working on that same reporting structure. Timelines have been provided and are being executed in connect with the board.
To date, we've been working on a timeline for monitoring and reporting that's primarily related to the TSA. As we asked further questions in this discussion about the broader Commonwealth position, we came to this point where we need to broaden and look at controls across the Commonwealth and not just over the TSA.
And timelines have been provided for that purpose?
Yes.
Yes. So we are working together on providing that same visibility?
Yes.
Okay. Now, Mr. Chairman, I would actually like to make my remarks.
Proceed.
Mr. Chairman, other colleagues of the board, Ms. Jaresco and Mr. El Khoury, and good morning to everyone else here today. Today's agenda included, as this last item, discussion, public comment, and proposed actions regarding right-sizing measures in the Commonwealth fiscal plan. Yet, Mr. Chairman, discussion, I do not believe, was truly the spirit behind this portion of the event. Anonymous statements provided to the press over the past few days from within sources identified in the board personnel indicated that the matter was set. The board wishes today to decree and to impose a furlough program to the employees of the government of Puerto Rico. The fact that no agency of the government was provided a turn to counter-present Ms. Jaresco's presentation underlines this concern. Now, Mr. Chairman, to step back a moment, over the past 7 or 8 months, the board and the government have been able to work together and overcome differences to push forward an agenda of fiscal responsibility and economic stability for the island. And to be clear, the government, its officials, and myself are still and continue committed to working with the board and to meet our targets in the fiscal plan, the certified budget, and the governor's public policy platform. But, Mr. Chairman, today on this issue of furloughs, the government understands that the line needs to be drawn. There will be no furloughs. You can take that to the bank. And the reasons for that are many. The first reason is that the public and the people of Puerto Rico must be assured that there is only one government in the island, and that government is led by Ricardo Rosselló. This fact is recognized and enshrined in Promesa. As his legislative history of Promesa indicates, through the words of former resident Commissioner Pedro Pierluisi, the board will provide guardrails, but will not supplant or replace the territory's elected leaders, who will retain primary control over budgeting and fiscal policy making. Indeed, in one event where I was present, you described it as setting the size of the room, but we get to put the furniture. This also is the spirit within Section 205 of Promesa, regarding recommendations to promote financial stability and management efficiencies. Section 205 specifically contemplates measures on personnel, such as furlough, as recommendations. As again, Mr. Pierluisi pointed out in Congress, the goal of Section 205 is not to have parallel governing structures. The board does not have the power to impose its recommendation, and in that effect, Promesa is clear. The second reason is that there also must be an assurance that there is one fiscal plan, and it is this document right here. Unilateral amendments in a separate document are recommendations, even if under the board's letterhead. The fiscal plan provides right-sizing targets and the government's commitment to reform the government's framework and operation. Indeed, the fiscal plan specifically includes a provision expressly stating that to meet fiscal plan objectives, the government may consider additional measures. The government of Puerto Rico is committed to right-sizing. The governor ran on a platform of right-sizing that predates the board and predates the enactment of Promesa itself. The government will meet its fiscal goals, but under the policy established by the government itself, consistent with the fiscal plan. Since day one, this administration and the legislature have enacted unprecedented measures to place Puerto Rico on the path to fiscal health. This includes significant cuts to payments from the general fund that have already today impacted every sector of the government, including municipalities, NGOs, public corporations, and the central government itself. The numbers speak for themselves. From the 230 liquidity projection for June 2017, the number was surpassed by almost $1.6 billion, and the sources of those funds have been shown to the board. This places Puerto Rico in a much better position to face the grave fiscal challenges ahead and that we have publicly recognized, like the payment of pensions and health care. To be clear, we beat the expectations once already, and I can commit that we will beat those expectations again. The board recognized this on June 30th when it certified the $200 million cash reserve. Mr. Chairman, we will right-size the government of Puerto Rico because we want to, and because we need to for the good of Puerto Rico, not because of the menace of an ultra vires imposition. We have provided numerous reports, working papers, and other identified sources for those cuts or those reforms that need to be done. But we did not participate in the scoring process. Third, we have started on a path of renewing trust in our tax system, in our financial information, and we have established, again, unprecedented cost controls that this board has even acknowledged in its report to Congress. It's not perfect, but it's definitely much better than what was there before. Rome was not built in a day, and the government of Puerto Rico will not be reformed in 2 days. The government will commence its reporting responsibilities under Promesa and the fiscal plan in the upcoming weeks as established in those documents. And then we would have a basis of facts on which to decide what recommendations are appropriate and which are not. Furthermore, we cannot take lightly the impact on the economy that this furlough program could have in conjunction with the cuts that we have already established in the budget and that we are committed to taking into effect. This impact may actually unravel the progress that we have already made. Again, I must repeat the position of the governor of Puerto Rico. There will be no furloughs. And although we may have a contentious discussion on this effect, please rest assured that our commitment to cooperate in all other efforts remains intact. Thank you.
Thank you, Mr. Sobrino. Before I open the floor for public comments, would any additional board members like to make a statement or speak?
I have some comments, and I don't know if maybe my colleagues have comments. We can.
I do have some comments also, Mr. Chair.
Mr. Garcia, let's begin.
So, first of all, thank you, Mr. Sobrino, for the passionate appeal and all the items that he has discussed. But I think it's important, for the background, for the knowledge of the board, and maybe for the knowledge of Mr. Sobrino, too, who was not involved in some of these discussions. I want to go back to some of the history on how the fiscal plan was certified, because I think this is going to be very critical to be able to shed light. So under the discussions in the process of certifying the fiscal plan, the board proposed certain conditions, which those conditions were critical and essential in order to be able to achieve the certification of the fiscal plan. They would have not been a certification by this board of the fiscal plan if those conditions would have not been included. Those were conditions that were not ultra vires, they were not imposed. Those were conditions that were presented to the government. Those conditions were discussed with AFAF. Those conditions were discussed with the governor's representative, and those conditions were even some of them modified. Those conditions were discussed about the difficulty of the implementation of some of those measures, and the government requested time in order to be able to present that they would be able to comply. And the board wishes this government to be very successful and to be able to implement, and the board wants to have faith that the government will be able to comply. But the truth of the matter is the following. We're already on the second month of the fiscal budget, in which a lot of implementation plans were presented. If 75% of those plans, have shown that you can get to 75% of what those requirements are. But there's a 25% in which, to the satisfaction of the board, after thorough review and conversation, after extending time so the government could provide more detail on those plans, those details were not able to be provided. The concern of this board, in terms of our responsibility, is that the effect on the government employees and on Puerto Rico could be significantly larger if for some reason, which there's a lot of difficulty in being able to implement all this. We all know this is not an easy task. This is a very difficult task. If in the case that a furlough is not commenced at this appropriate time, that amount could be significantly higher. If for some reason it is missed. And instead of talking about potentially 2 days, it could be 4 days. That's a risk that is too large, will be too significant. This board has spent a lot of time just going through every single plan and every single measure. We want the government to be successful. That is our job. That's the common interest of all of us here. But it cannot be at the expense of putting at risk, further reductions that what have been planned and what was included on that plan. So I think it's important to weigh all these requirements, as obviously, this board would want to have, as we have tried, to have a good solution, work with the government. But this was not a recommendation. This was a condition to the plan. This is something that was consented by the government. There was no opposition when these conditions were part of that certified plan. The government representative didn't say anything. That was March of this year. And then several months passed. We sent a letter to the government. Nobody said that there was an opposition, and that has been an integral part of that. So I just want to be able to state all these elements, because I think this is important, that this is nothing that is being done on a capricious way. The government has known about this. We have had plenty of discussions of it. You have working very hard in trying to comply with those conditions. You have complied with most of the conditions, but unfortunately not with all of the conditions.
Mr. Garcia, I would like to just state as a matter of record, and I am authorized to state as a matter of record, that the governor did not agree to those conditions. Those conditions were notified to him unilaterally, and since the moment that the fiscal plan was certified with those, quotes, amendments, the governor has been clear that he does not agree with them. And that is also fact. Regarding the other items you have mentioned, we have been providing a lot more line items and a lot more description of how we plan to get to our targets. The scoring process the board took upon itself did not include us in the discussion until later late in the process, and at that time a decision had essentially already been made. So again, I am happy that we share a commitment to the fiscal soundness of the island, but we cannot agree and we cannot implement this program, and we won't. That is the policy, that is the determination of the government. We take seriously the risk that you mentioned. It is something that we have taken into account in making this determination. But again, those conditions were notified, but they were never agreed to, and the government has been expressly clear on that since day one after they were made public.
Thank you, Mr. Garcia. Thank you, Mr. Sobrino. Do you have something to add, Mrs. Matos Santos?
Sure, Mr. Chair. I want to concur with Mr. Garcia's points, recollection of, and restatement of how we arrived to this point and the elements of the Commonwealth's fiscal plan. I also want to reiterate and build on the fact that we recognize the significant work that has been done to date, the significant progress that has been made, the significant effort that it's taken to get to a place of having a certified fiscal plan, having a budget that is generally consistent with that certified fiscal plan, and moving in the positive direction. It's not, as I think about it, it's not a question of whether there's a movement in the right direction. It's a question of degree. It's a question of risk tolerance. It's a question of an assessment of what are the implications if efforts fall short. I am reminded of Ms. Jaresco's comments and consideration that the furlough program, based on those efforts, would be substantially smaller than what was envisioned at the time of certification of the fiscal plan. I am also reminded of her point, and I wholeheartedly concur with this, that the work is really hard and substantially harder than one ever than one thinks initially. Turnaround efforts, the extent to which, the way in which I think of it is one has to manage everything you can possibly manage, because frequently you end up getting curveballs and they don't necessarily go in the direction that you needed. And the repercussions, the human impact of error is way too high. It's too late at the last moment to realize that there's not enough room, and that one is facing either a bigger furlough program or one is facing challenges and choosing between, paying for vendors to the Mi Salud program, or paying payroll, or meeting other critical elements that, or ensuring that the pension systems can be able to, continue making those payments. Having lived through the cash management crisis, having lived through the turnaround crisis, I have acute sense of what it's like to get the call from your director of corrections that their food vendors are looking at stopping delivery of food, and what that's going to mean to the institution that needs to ensure that people can continue to eat. So the risk is too high. Considerable effort has been made. That Mr. Sobrino spoke to the economic impact of measures, and the economic impact is significant and one that I very much keep in mind. But beyond this, for me, it's a human impact, and there's definitely a human impact with measures, and there's a human impact associated with reductions, and recognize it. See it with pensioners, see it with employees, see it in all the different areas of folks that rely on the critical services that government provides. But the human impact is greater when not enough is done to manage. And thinking about the implementation plans that we have received, it's just, in my view, not there. And a furlough program is necessary to ensure that the budget savings are achieved. And beyond that, I think about it from the perspective that year one of this fiscal plan is the easiest of the 3 years. Getting to year 3, the level of transformation required, what it means to restructure the Mi Salud program so that you can achieve savings of close to 30% from today's level of expenditure, what it means to transform government to be able to maintain essential services in a responsible manner at 30% less cost. It is very difficult to develop, let alone actually implement. So while I recognize the human impact, while I recognize the difficulty of this, and while I recognize, and I'm pleased with the progress that allows for a reduction of the size of the furlough program, it is my view that it's imperative that we move forward pursuant to the certified fiscal plan and our determination of what is needed to achieve and restore fiscal balance on the island.
Ms. Matos Santos, regarding
Mr. Sobrino, I'd like to recognize Mr. Biggs.
Thank you. I would like to just make a quick point regarding pensions. The fiscal plan as submitted by the governor back in March, I believe, contained somewhere around a 2.5% cut in pension benefits. That is not a level that the board would have approved the fiscal plan under. We amended it to include a 10% reduction in benefits. Regardless, the position of the government today appears to be that there'll be a 0% cut in pension benefits. And so, even to the degree we're referencing the fiscal plan as submitted by the governor, I don't believe the government's current position is consistent with that plan, much less with the plan as amended by the board.
Mr. Biggs, Mr. Sobrino, would you like to say something?
Yes, I would like, and with this I think I can close and allow the public to make additional remarks. And my remarks are in response to the human element referenced by Ms. Matos Santos. I have lived my adult life in Puerto Rico under crisis. I have seen every administration. They have all promised to establish fiscal responsibility in 1 year. None has been able to cut multi-year appropriations. None has been able to resolve the issues with the GDP. None has been establishing the controls on tax credits that we have established. None have been able to pass labor reform in under a month. None has been able to pass comprehensive permitting reform in under a month. None has been able to do the things that we have been able to do. So if we're talking about the facts and the human element, especially in a population that sees its family members and sees its friends and its colleagues move to the stateside, every month we have done everything with a present commitment that has not been seen in this island since probably the times of Togwell. So I can tell you, we will prove this assumption wrong, we will succeed, and the government of Puerto Rico will be reformed as we in Puerto Rico see fit.
Thank you very much, Mr. Sobrino. Now I'd like to open the floor for public comment. Each person has, again, up to 3 minutes to express their views. Any person interested in a turn, please stand up, and once I recognize you, we will turn the microphone on and it will be taken to your seat. Please state your name and your affiliation if you have one and speak as clearly as possible.
Hi, Jerry Bertella.
Of course, sure.
I have 3 minutes, but just wanted to, first of all, congratulate my brother at arms, Christian Sobrino, with an extremely passionate and factual presentation. Anyway, just wanted to express a few things regarding the presentation given by Executive Director Natalie Jaresco. We disagree in a few things. Obviously, we, the government of Puerto Rico, we have implemented aggressive legislative actions for the past 7 months, over 30 of them, executive orders, all geared towards fiscal responsibility. we have the political will. We are aligned with the Legislative Assembly as well, all towards complying with the fiscal plan. In terms of, they're saying that it's an issue on the non-personnel right sizing. I mean, we just approved the budget a month ago. You're just giving us a month to make a decision. By Section 204B, I think it's B or A, the government of Puerto Rico has to comply with the board to provide quarterly reports, which all of them will be due October 15th. In that way, the board can make a decision whether the government of Puerto Rico is complying with or not complying with the different measures in terms of cash, budget versus actual, et cetera, et cetera. So you're making a decision on August 4th. That's 2.5 months before the deadline of the first quarterly report. So, I mean, that kind of concerns me a little bit. Third, I don't know if you analyzed this, but possibly the furloughs would impact economically in the next 2 fiscal years around $600 million in the economy. How are we supposed to, swim if you're putting downward pressure of $600 million in economy? So that's, for me, that's kind of interesting as well. In terms of the, you've said about collaboration, we received the scorecard in an informal way about 10 days ago. How are we supposed to counter-argue or collaborate, in terms of the non-personnel measures? That's something that also blew my mind. Just want to express, I think we've had a great collaboration for the past 7 months. We've accomplished a lot: 7 fiscal plans, liquidity plans, bridge reports, you name it, approved budget, and in this item specifically, I guess we have not collaborated correctly. And I just want to express, that with the government, we have the political will. We will do this. We will prove you wrong. And to finish it off, I just kind of wanted to talk about the scorecard specifically, just to, if the board can express a little bit on their methodology on how you went about scoring these measures. Kind of wanted a little more feedback on that. That'll be all. Thank you.
Thank you for expressing your views. Does anybody have any additional comments? Mr. Irizarry?
Yes, my name is Jorge Irizarry. I am the executive director of Bonistas del Patio, and I just wanted to add our perspective on the different topics that have been discussed today. Of course, the discussion going on most recently, it highlights the challenges that Puerto Rico faces, and the job and the intention of both the board and the governor and his team to come together and to address those problems. But as we went through the different topics, I just want to highlight one that has not come up, and I'll start with the pension reform. We applaud, the Bonistas del Patio applaud that pensions be paid to the fullest possible extent to the government employees. And within Bonistas del Patio, there are a majority probably of the 60,000 people that are also retired and are suffering a much more dramatic impact on their pensions. The typical Puerto Rico bondholder saved up their money during their career and invested it, unfortunately, in hindsight, 100% in Puerto Rico bonds, which currently are not paying. So the average government pensioner gets around $1,200 a month. That average, I don't think, is going to be affected in any instance. But that's not very different from the average that a Puerto Rico bondholder would expect to receive from his investment in bonds. And yet the fiscal plan which proposes 10% cuts, perhaps in pensions, 2% cuts in pensions, or 100% pension payment. In contrast to that, in dramatic contrast to that, the person holding Puerto Rico bonds, resident in Puerto Rico, would face a 76% cut in what he gets from, what he or she gets from their investment in Puerto Rico bonds, saving all their life. Now, the fiscal plan, the central government and its component units in the fiscal plan are spending in the area of $17 to $18 billion currently, of which, according to the fiscal plan, 96% is essential also, although we haven't gotten a clear definition of what is essential. And over time, comes down slightly, but then increases to about $21 billion in year 10. So within that, although expenses go down and then go back up, the debt service is still held, as you know, around $787 million of the $3.4 billion average that those 10 years would require. So what I'm highlighting here is that there are 60,000 people in Puerto Rico, and of those, not all are that needy, but certainly the very wealthy of those, even if there were 5,000, which they're not, there would still be 54,000 that do depend on their savings. And those are not being those are being affected dramatically, as I said, in the fiscal plan, proposing 74% cut in those payments, the debt service payments, and those are not being mentioned. And the payments to those people, to the local bondholder, represent more than 1.5% of GNP. That's going to be cut by 76%, that 1.5. So how are we going to have economic growth? All these things affect economic growth, not just the government spending. The payment of the debt service affect economic growth dramatically, over 1.5%. And the other part is people are, the local population at one point held over 30% of the total outstanding debt. In 2012, it was $25 million of the approximately 70 held by Puerto Ricans. So to return, that 30% of the borrowing came from the local market. To the extent those bondholders are not treated more equitably, more reasonably, they will never return to lend money to the government. So return to capital markets is one of the board's objectives, as well as balancing the budget. But we just don't see how those can be, how economic growth and return to capital markets can be achieved given the fiscal plan. And again, we applaud paying the pensions. We recognize the co-ops, who is the only economic, the only sector within the financial industry in Puerto Rico that has grown since in the last 5 years. They've grown. All other sectors have reduced their assets by almost 50%. So it's dramatic that the co-ops are there, and they are a big bondholder. And as was mentioned here, they have $965 million at stake here. So that's what I wanted to bring up, which hadn't been mentioned in the discussion. Thank you.
Thank you, Mr. Irizarry. Would anybody else like to express their views regarding the furlough issue? No. Well, thank you very much. Now I would like to move on, and on the basis of the report presented by the board's executive director on the implementation of the furlough program, the chair requests from the executive director whether she would like to propose a resolution for the board to consider and vote upon.
Yes, Mr. Chair, I would like to propose a resolution, and I'll request Mr. El Khoury to read the same into the record.
On June 30, 2016, the Federal Puerto Rico Oversight Management and Economic Stability Act, PROMESA, was enacted, and whereas Section 101 of PROMESA created the Financial Oversight and Management Board for Puerto Rico, the board, and whereas on March 13, 2017, after holding a public hearing, the board certified the governor's proposed fiscal plan for the Commonwealth, subject to certain amendments adopted at the March 13, 2017 meeting, and whereas on April 15, 2017 and May 31, 2017, the board approved certain revisions to the previously certified fiscal plan for the Commonwealth and recertified the fiscal plan as so revised. And whereas the certified fiscal plan for the Commonwealth of Puerto Rico provides for the implementation of a furlough program if the board determines in its sole discretion that certain conditions are not met, and whereas the board has determined in its sole discretion that such conditions have not been met, now therefore it is hereby resolved that the government must plan for and execute a furlough program commencing on September 1, 2017, the implementation of which must result in a net savings of at least $218 million for fiscal year 2018. And two, the furlough program will remain active until two criteria are met. One, the required savings of $218 million have been achieved or are reasonably expected to be achieved based on actual fiscal year to date and projected fiscal year performance. And two, the Oversight Board determines in its sole discretion that the government has made material and sufficient progress toward identifying opportunities, developing plans, and beginning to execute the transformational changes required to truly right-size the government.
Thank you, Mr. El Khoury. I move that that resolution be approved. Mr. Biggs.
I second the motion.
I would like to ask for a voice vote. Those in favor of yes, in favor, please say yes. Yes.
Yes.
Yes.
Yes.
All members having voted in favor of the motion, the resolution is approved and it has passed unanimously. Since we have no other matters to cover, I move that we adjourn this meeting.
I second that motion, Mr. Chair.
I would like to ask for a voice vote. Those in favor, please say yes.
Yes.
Yes. All members having voted in favor, thank you. All members having voted in favor, the meeting is now adjourned. Thank you very much.
Pasamos ahora a la conferencia de prensa. Le pedimos a las personas que están en el salón que salgan para que la Junta pueda atender a la prensa. Gracias.
Can I have your notes? You mind if I take it?
Oh, yeah. Yeah.
Whatever.
Actually, supposed to.
Sí, sí, sí.
Francisco, can you hand me that name tag? Both of them. I'm gonna start with you.
You are? Yeah. We're missing space here, so he's going to stay.
Who's gonna stay for you? Yes, I do. Yeah, Anna's gone to the restroom as well, so. Carlos will not stay.
Trust me, it hasn't been two for a while.
If it's two, everybody here's going to.
Just stop.
I'm going to put a.
I'm gonna start with this statement to the press and then we're gonna go back and make shortly.
Christian is going to sit here, and he doesn't want to remove himself.